Okay, today in financial accounting, we are going to look at the accounting equation and its relationship with debits and credits. This is the accounting equation. You might have seen it in some of your textbooks, or maybe you've never seen it at all, but this is the accounting equation that you use pretty much throughout financial accounting. It's A equals L plus SE. Now, what does that mean? Well, A stands for assets, L stands for liabilities, and SE stands for Stockholders Equity. Assets are the resources of the company. Liabilities are creditors' claims to the resources. And stockholders' equity is the owner's claim to the resources. Now, stockholders' equity is made up of a couple things. It's made up of common stock and retained earnings. Common stock is considered to be an external source of equity, where retained earnings is considered to be an internal source. Now, retained earnings is made up of a few different things. To determine retained earnings, you take revenue minus expenses minus dividends. Revenue is the money made by providing a service or product to customers. Expenses are the cost of providing that service or product, and dividends are payments or distributions out to the stockholders. I want to draw a little line right here. It goes between the, right there on the equal sign, it's between assets and the liabilities and stockholders' equity and everything that goes into that stockholders' equity. We're going to use that line to determine debit and credit. So debit is on the left with the assets and credit is on the right with the liabilities and stockholders' equity. Something that you're going to want to go ahead and commit to your memory is debit's left, credit right. Okay? Easy ways to do this would include thinking of DC Comics. The D is on the left, the C is on the right. Or Washington, DC. Those are typically two of the ways that I tell my students to remember which is on the left and which is on the right. So debit on the left, credit on the right. Now, the reason that we have debit on the left and credit on the right, and the way that we look at it this way, is that on the left-hand side of this equation, assets increase with a debit. On the right-hand side of this equation, liabilities and stockholders' equity, and most of those underneath, increase with a credit. However, if you look down under retained earnings, you see revenue, but you see expenses and dividends are in red. That is because expenses and dividends reduce retained earnings. So let's look a little bit further at this. For assets, assets increase with a debit. That means that they decrease with a credit. On the right-hand side, liabilities will increase with a credit and decrease with a debit. Stockholders' equity will increase with a credit and decrease with a debit. So common stock will increase with a credit and decrease with a debit, and retained earnings will increase with a credit and decrease with a debit. Revenue increases retained earnings. Therefore, it increases with a credit and decreases with a debit. Expenses and dividends reduce retained earnings. So expenses and dividends increase with a debit, thereby decreasing retained earnings. And expenses and dividends decrease with a credit, thereby increasing retained earnings. So underneath the expenses and dividends, you see here that both of those increase with a debit. And that again is because of the effect that they have on retained earnings.